Internal Revenue Service IRS tax news. The American Rescue Plan includes retroactive tax benefits that can help taxpayers. COVID tax tip 2021-74, May 25th, 2021. The IRS reminds taxpayers who still haven't filed, so if you haven't filed yet, this is especially going to you here, that there are several provisions of the American Rescue Plan affect their 2020 tax returns. One provision includes up to $10,200 in unemployment compensation from income. Another provision benefits many people who purchased subsidized health coverage through their federal or state health insurance marketplaces. So these are two of the more kind of unusual type of credits. They can be a little bit complicated, and they enacted them a little bit late and put them in retroactively to the 2020. So these are two, if you had already filed your tax return and you had not done these two in the format that they are saying here, hopefully the IRS is basically in most circumstances going to pick that up and make the adjustments for you, and then basically make those adjustments on their end without having to file an amended return. In most cases, that's what they're looking to do. If you have not filed yet at this point in time, then you want to make sure that you're taking these into consideration so that you get your biggest benefit when you file up front. One of the ways to do that is to utilize tax software. So we had a lot of these changes, these retroactive changes, and those things are going to be things that hopefully the software companies are keeping on top of. They're going to be doing a better job, than most likely to do so. They will have an interview process generally when you fill out the tax return, which can help you on these types of things. So I believe the free software is still available, so you can check out the free file on irs.gov, which will take you to third-party software such as a TurboTax and other kind of third-party software, and then hopefully that'll help you to make the right choices, especially in this atmosphere where there's changing laws and retroactive things going on and all this kind of stuff. So the law also includes the third round of economic impact payments. There's a link to that here. Currently going out to eligible Americans that are generally equal to $1,400 per person for most people. The IRS will automatically provide these benefits to eligible filers. Most taxpayers who have already filed their 2020 returns should not file amended returns, file refund claims, or contact the IRS about obtaining these newly enacted tax benefits. So this is the thing that's kind of tying the IRS up a bit, because obviously they enacted these things a little bit late and they wanted to apply them to 2020, but some people had already filed. So if you had already filed and you have something like the unemployment situation or the health insurance marketplace type of situation, and you had included it in such a way that it would be not as beneficial to you under the old law, then they're trying to basically take care of that on their side without you having to file an amended return. You might actually confuse them in those cases if you file an amended return. So if you're considering filing an amended return or something like that, you want to look on the IRS website and see if it's a situation where they recommend you to file an amended return. Most of these items, if the IRS can change it on their side automatically, you will typically be better off letting the IRS do that, and they're specifically trying to go after these and change them automatically on their side. Also, if they have like a math error or something like that, usually that's something that the IRS will pick up. So if you notice something that went wrong on your tax return and it was a math error, then the IRS, just by them processing the return in their computer, it should pick that stuff up automatically, and hopefully they will then make the adjustment for you, send you a letter, and you can just basically approve it instead of trying to amend the return, which again can confuse the IRS and it can take a longer time to do. And filing a 1040X is actually kind of burdensome, task to do. So if you can get it done on their side, then that would be great. If it's a situation where you think you need an amended return, you might want to do a little bit more research just to make sure that that would be the appropriate action. So these actions will speed up future refunds. In fact, they could even slow down an existing refund claim. So they're basically saying if you confuse them sending an amended return, it could botch things up, because they're going to try to be fixing it on their side, and then they got another amended return, and they're going to have to reconcile those two items. Some unemployment compensation may not taxed for many. So for tax year 2020 only, the first $10,200 of unemployment compensation is not taxable for most households. So the unemployment, most of the time, usually under the old law or under normal conditions, the unemployment is going to be taxable. You would then get some kind of 1099, typically from the state, telling you the income. You'd have to include it in income. And income, remember, for taxes, income is bad. If you have to include it in income, then the IRS, that's basically saying the IRS, your silent partner, wants their share. They're gonna calculate taxes on it. If you do not have to include it in income, that's good, and that's what they're saying here. They're saying for this year only, you don't have to include it in income, and that means you have less income, and that would mean that you have less taxes. So that's the change that was made. That's a little confusing because you're still going to get the 1099, which usually is an indicator that you have to report it, or you may have to report it in income. So you're still probably going to get that, but the idea is that you're not going to have to be taxed on the 10,200 up to 10,200 is going to be the idea, and that should be a good thing. So this tax benefit is available only to those who modified gross income is below 150,000 during 2020. The same income cap applies to all filing statuses. So whatever the filing status, same cap. This means that those eligible who haven't yet filed 2020 return can exclude the first 10,200 of total unemployment compensation received from their income and pay tax only on the difference. For couples, the 10,200 exclusion applies to each spouse. So it applies to each spouse. For couples, taxpayers can visit irs.gov for details. Notice if you have two spouses there with the 10,200 limit, if you put that into something like tax software, then you might have to indicate basically which spouse they would be applied to, and maybe the software will help you out. I'm not sure exactly what the data input would look like on the software, but just be aware that if you have two spouses, that you might have to indicate that in some way. But hopefully use the software to help you to guide through that. Taxpayers can visit the irs.gov for details. There's a link to that here. For any eligible taxpayer who has already filed a tax return and reported their total unemployment compensation as income, the IRS is automatically adjusting the return and providing them this tax benefit. So once again, if you had included it in income, your taxes most likely would be higher. The IRS is trying to do that automatically without you having to take any action, such as an amended return. So refunds based on this adjustment are being issued in May and will continue through the summer. So they're going to be sending those out May all the way through the summer. So it might take them a little bit of time here to make the adjustment, but they're making the adjustment on their side is what they're saying here. And if you file an amended return, you might confuse them more, is what they seem to be saying as well. So refund amounts will vary, and not all adjustments will result in a refund. So the payment of excess advance premium tax credits suspended. So taxpayers, this is the one to me that's a little bit more confusing, but let's see this one. So this is if you're in the marketplace, so you're in the health insurance marketplace, and you got this kind of benefit reduction in possibly the amount of your premium for health insurance. So let's see this one. Taxpayers who purchase health insurance through a federal or state health insurance marketplace for insurance in 2020 don't need to repay the 2020 excess advance payments of the premium tax credit and will need to attach Form 8962 premium tax credit when they file their 2020 return, only to claim an additional credit. So basically, let me just kind of see if I can break this down here. Generally, when you go into the health insurance marketplace, one of the benefits of that is they're going to get, you're predicting that you're going to have a premium tax credit, which is a PTC. They'll call it a PTC, and so what they'll do is they'll try to predict what that tax credit will be. They can't do it exactly because the tax code is complicated, and we don't know exactly what your income will be. So they try to estimate it to do this prepayment thing again, and they're going to call it the advanced premium tax credit. So the advanced premium tax credit means that they already gave you the credit in advance of filing the tax return. This one being in 2020, the tax return for year 2020, which would be filed in 2021. They didn't give it to you in cash. They gave it to you by lowering the amount of the premium that you're paying for the health insurance. And so you lowered the amount of the premium by the amount of this credit on a monthly basis would be the idea. And then when you've actually filed the tax return at the end of the year, you're going to compare the advanced premium tax credit that you already got to the actual premium tax credit, which you don't really know until you file the tax return. And if the advanced premium tax credit was higher than the actual premium tax credit, you got an overpayment during the year, and you'd think that would be a bad thing for your taxes. You would think that you'd have to lower your amount of refund or you'd have a liability that would be increasing due to that difference. But it looks like that's the thing that they're kind of waiving here. And there's funny implications with this as well. They're saying that this is a one-time thing. So if you learn this and then you do that and you benefit from it, your next reaction will most likely be, hey, is there any way I can increase the amount of my advanced premium tax credit? Because if I could, and they did this again next year, they're just going to waive the difference. And so they're saying this is a one-time thing, so that will not be beneficial for you, is what they're saying here. But that's probably might go through your mind, and there's no guarantee they won't do it again next year. You don't really know. So, but in any case, that's going to be the idea here. So they may use the Form 8962 to figure the amount of the premium tax credit, the PTC, they qualify for based on their 2020 tax information, and reconcile it with any advanced premium tax credit, the APTC, that was paid for them through the marketplace. If the PTC, based on their 2020 tax information, is more than the APTC, they can claim a net premium tax credit on Form 8962 and must file Form 8962 when they file their 2020 tax return. So in other words, if you got the advance payment, the APTC, and it's less than the actual tax credit, the PTC, then you're going to get the rest of the credit, which makes sense because you didn't get the full credit during the year. And to get that, you generally have to file Form 8962. It's when it's the other way around that it's a bit unusual. That's where the change happens, when the advance credit, the prepayment, is greater than the actual credit after you file the tax return. So, however, if the APTC was more than their allowable PTC based on their 2020 tax information known as the excess APTC, meaning you got a bigger advance payment than you should have got based on the actual credit after knowing what it should be by filing the tax return for 2020 in 2021, the new law suspends the requirement to repay excess APTC for 2020. This means that taxpayers with excess APTC for 2020 do not need to report the excess APTC or file Form 8962. So the thing that's funny about this is it seems to benefit people who, somehow completely overestimated the APTC and got a bigger reduction in their premiums than they should have got based on their actual income, and don't have to pay that back. And again, it seems a little funny to me, but in any case, because if you actually did the estimate correctly, if you calculated your estimate correctly, you get no tax benefit. But if you calculated it incorrectly and you completely got an advanced prepayment over your amount of the actual credit, then you get a benefit. Seems kind of funny to me. And it also seems like it might make you think, maybe I should go out and try to see if I can get a huge advance payment based, by talking to the health insurance marketplace and telling them my income's lower than possibly it is, or something like that. So I don't know, but you shouldn't do that. I mean, that might not benefit you because they're saying this is a one-time thing just for this year. But again, the law can change at any time. So they've done it this time. They might do it again. So you never know. Seems like a kind of a weird change to me, that one. But in any case, taxpayers who have already filed should not file an amended tax return. The IRS will automatically reduce the repayment amount to zero for anyone who already reported excise APTC for 2020. So this is another one where, if you already filed, then you're going to say, well, now I claimed it, and you're saying I don't have to now. Should I amend the tax return? They're saying no. This is another one where they're trying to take care of it on their end. I would still possibly calculate it in the tax software if you have access to it to see what the difference will be, and then wait for them to make the adjustment. And they should give you a letter telling you what the adjustment is, and then you can kind of compare and see if they got it right. See if you agree with what they did. If not, then you can take action at that point in time. That might be one approach to do it. So in addition, the agency will automatically reimburse anyone who has already repaid the 2020 excess APTC when they file. The best way for all taxpayers to keep up with tax law developments is to regularly check the irs.gov, irs.gov, the IRS website,